Continental Reinsurance has reported a half-year earnings per share of 10 kobo. The reinsurance company saw insurance premiums revenues rise 12% to 7.2 billion naira. Profit after tax declined, actually rose 6% actually to 1.1 billion naira. Lawrence Nazari, Executive Director at Continental Insurance, joins me now to break down those numbers. Thank you so much, Lawrence, for joining us. The insurance business seems to be struggling in Nigeria these days. We haven't seen major growth, but it's good to see that at least we're seeing some moderate growth in your business. So talk us through what you will call the key takeaways from this half-year numbers. What can we learn about the insurance industry from what we're seeing at Continental Re right now?
I think the insurance industry basically is showing some fairly strong underlying growth, in fact, and that does have a knock-on effect on reinsurance. But I think this is a peculiar year in terms of revenues for Nigeria, and I think you might have discerned it from other players in the primary insurance market. The imposition of no premium, no cover has actually caused, underlying
the impact of that?
Underlying clients, I think, have had to realign their uptake of insurance to conform with actual cash flows, because the Commissioner's Office requires that companies actually pay for their premiums upfront rather than in previous periods where some bit of credit.
Do you think this is a major game changer in terms of its growth impact going forward?
It's not a major game changer in terms
of that moderate growth,
actual growth, because I think there will be a lag effect. But I think what we are seeing and what we should see as we pan out into the third and fourth quarters is, it should all even out.
Right.
Right. But as far as the major game changer for us as players is that it improves cash flows. One of the biggest impacts of the previous credit regimes in insurance has been significant provisioning for, doubtful and bad debts. And we believe that's going to be behind us as far as the Nigerian market is concerned.
Right. Well, we'll certainly be tracking that, and hopefully it plays out as you are suggesting. But in this environment, let's talk a bit about the key drivers of revenues for you. Maybe we can talk a bit about the investment environment. Of course, insurance premiums need to be invested for you to be able to make those payments for claims going forward. So how do you assess the environment right now? The equities, fixed income, your thoughts?
I think as Continental Re, because we are in the mainly primarily in the non-life space, we are not major players in the equities market, although we do have a small equities portfolio. We are mainly invested in short-term instruments, cash equivalents, and also other fixed income instruments. I think we have seen in the last 6 months, or in the first 6 months of the year, a fairly stable and double-digit scenario, which is quite favorable to us. And it's not only in Nigeria, but in one of our key markets of Kenya.
Right. And in the life business, how is that playing out? Of course, we've seen some players like Old Mutual come into this market. I imagine that reflects the opportunity that they see. So your thoughts about how that is developing?
I think life is obviously, because of the sheer demographics and the significant increase in the middle sector here, you're going to be seeing a fairly significant influx of foreign players, because everybody perceives Nigeria to be a huge opportunity. The middle class here is burgeoning, and I think we are going to be seeing a significant uptake of life in obviously products and other personal lines products, and it's quite exciting for us. We believe the life space here is going to be.
All right, I need to wrap up very quickly. You can just touch on your Africa strategy. You just mentioned Kenya. How is that playing out?
Oh, Kenya is exciting. I think we are seeing very, very significant growth both in Kenya and in the regional markets where we are present. Sudan is growing very, very well for us, and then Egypt, obviously we are coming out very strongly there, but the challenges obviously of the last 6 months have not helped affairs, but we still see some fair bit of business coming through from that market.
All right,
but we're excited about Kenya.